Get ready because the news cycle is absolutely exploding, and we're here to break it all down for you on Qualcomm Pulse. The pace is relentless, the updates are unmissable, and you're about to get the inside track on what's shaping our world. We're diving deep into the stories that matter, the moves that are making waves, and the insights you won't find anywhere else. From high-stakes economic analysis to major market shifts and significant government involvement in industry, we've got it all covered. You won't want to miss a second of this. Let's go. First up, we're tackling a bold economic perspective that's challenging conventional wisdom. A renowned former Reagan economist is weighing in on a significant government investment, offering a critical look at the company's performance and the strategic implications of this major stake. Is this move a sign of future economic policy or a one-off? We'll get into the details. Then, we're shifting gears to explore the wider ripples of this particular government investment strategy. The president himself has signaled a desire for more such deals, but is the business community ready to embrace this new era of government participation? We'll unpack the potential implications and the mixed reactions from corporate America. Next, we're zeroing in on the market's reaction to a seismic shift within a major technology player. The stock market is speaking volumes as a significant industry-wide pivot is underway, impacting one of the biggest names in tech. See how this development is shaking up the landscape and what it means for the future of innovation. And finally, we're looking at the official confirmation of a groundbreaking partnership. The U.S. government is stepping into a new role, solidifying its position as a significant shareholder in a pivotal industry. We'll break down what this unprecedented move signifies for the economy and for the companies involved. Stay tuned, because you need to know this. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. Intel's performance under scrutiny. Is Intel truly a company that's been masterfully steered? That's the question being posed by a prominent voice in economic circles. Former Reagan economist Art Laffer recently shared his candid assessment on Kudlow, directly addressing President Donald Trump's significant decision to acquire a 10% stake in the renowned chipmaker. Laffer, a figure synonymous with supply-side economics and a key architect of economic policy during the Reagan administration, didn't hold back in his critique. He suggested that Intel has not, in his view, exemplified a greatly run company. This assessment comes at a critical juncture for Intel, a company that has faced considerable challenges in recent years, particularly in its efforts to regain its technological lead in semiconductor manufacturing. The decision by the U.S. government, as reported, to take a substantial equity share, converting government grants into ownership, is a move that has sparked considerable debate about the government's role in private industry. Laffer's commentary adds a layer of economic skepticism to an already complex situation. His perspective implies that the government's investment might be based on strategic imperatives rather than a purely performance-driven evaluation of Intel's current standing. The semiconductor industry is, of course, a vital sector for national security and economic competitiveness, making government interest in companies like Intel understandable. However, Laffer's remarks raise pertinent questions about the criteria for such government interventions. Are these investments intended to bolster struggling but strategically important companies, or do they signal a broader shift in industrial policy where the government becomes a more active participant in corporate governance and strategic direction? The implications of a 10% government stake are far-reaching. It grants the government a significant voice, potentially influencing corporate decisions, research and development priorities, and overall business strategy. For a company like Intel, which is navigating intense competition and technological advancements, such external influence, especially from a stakeholder with potentially different objectives, could be a double-edged sword. Laffer's evaluation serves as a crucial reminder that while strategic investments are important, the underlying health and operational efficiency of a company remain paramount. His statement invites a deeper examination of Intel's operational performance, its market position, and its long-term viability independent of government backing. The broader economic context, including the global race for semiconductor dominance and the push for domestic manufacturing, provides the backdrop for this discussion. Laffer's opinion, given his considerable influence and historical perspective, is likely to resonate with many who are watching this development closely, prompting a critical look at how and why governments choose to invest in private enterprises, especially when those enterprises are not at the peak of their performance. But what does this strategic government involvement mean for the broader business landscape? We'll explore the president's vision for more such deals next. Government's new economic playbook. President Donald Trump has publicly declared his intention to pursue additional investment opportunities akin to the recent government stake in Intel, a statement that has sent ripples of concern through the corporate world. This declaration follows the White House's announcement of a nearly 10% equity share in the prominent chipmaker, a move that transforms government grants into a direct ownership interest. This innovative, and for some, unsettling, approach represents a significant departure from established economic norms. Historically, the U.S. government has only taken stakes in corporations during times of extreme crisis, such as the 2008 global financial meltdown or the subsequent bailouts of the automotive industry. Trump's desire to replicate this model in other sectors signals a potential paradigm shift in how the government interacts with and supports American businesses. While the administration frames these actions as a means to bolster domestic industries and ensure technological leadership, particularly in critical sectors like semiconductors, the business community is understandably cautious. Intel, despite its current struggles, remains a company with substantial financial resources, boasting a $9 billion cash cushion and a market valuation of $105 billion. This suggests the government's investment isn't a desperate lifeline, but rather a strategic maneuver. However, the implications of the government becoming a significant equity holder are profound. It raises questions about market distortion, the potential for political influence over corporate decisions, and the fairness of government intervention when private companies are not in dire straits. Critics worry that such policies could create an uneven playing field, favoring politically connected firms or those aligned with the administration's agenda, potentially stifling organic growth and innovation. Furthermore, the idea of the government actively seeking equity stakes could be perceived as a step towards a more state-controlled economy, a notion that clashes with the principles of free market capitalism that have long underpinned American economic policy. The announcement has been met with a mix of apprehension and curiosity. While some may see potential benefits in government support for strategic industries, many business leaders are wary of increased government intervention in the market. They fear that such policies could introduce uncertainty, complicate business operations, and potentially lead to unintended consequences that could harm the broader economy. The coming months will be crucial in determining whether this approach gains broader traction or remains an isolated, albeit significant, intervention. The debate centers on the appropriate role of government in fostering economic growth and technological advancement in a globalized world. But how is the market itself reacting to these shifts in the tech landscape? We're about to find out. Intel's stock faces headwinds amid industry realignments. In the dynamic world of technology, where innovation cycles are rapid and market sentiment can shift in an instant, Intel's stock has experienced a notable dip. The company's shares have tumbled by 1.01%, a movement that underscores the significant transformations occurring within the artificial intelligence infrastructure sector. This decline places Intel at the 14th position in terms of market turnover, a metric reflecting the volume of shares traded, indicating a period of active investor reevaluation. The broader context for this stock performance is the ongoing AI infrastructure shift, a monumental wave of change that is reshaping how technology is developed, deployed, and utilized. As companies worldwide race to harness the power of artificial intelligence, the demand for specialized hardware, advanced processing capabilities, and efficient data management solutions has skyrocketed. This evolving landscape presents both immense opportunities and significant challenges for established players like Intel. The company, a long-standing leader in the semiconductor industry, is navigating intense competition from rivals who are rapidly innovating and capturing market share, particularly in areas critical to AI, such as specialized AI accelerators and advanced chip architectures. Investors are closely monitoring Intel's ability to adapt to these industry-wide pivots. The 1.01% stock decline, while seemingly modest, often serves as an indicator of underlying investor confidence or concern regarding a company's strategic direction and its competitive positioning. In the context of AI infrastructure, where the pace of innovation is relentless, even minor stumbles can have magnified effects. Analysts are scrutinizing Intel's roadmap for next-generation processors, its investments in AI-specific technologies, and its partnerships within the burgeoning AI ecosystem. The market's reaction reflects a broader trend of investors seeking companies that are at the forefront of AI development, capable of delivering the high-performance, energy-efficient solutions required for training and deploying complex AI models. The ranking of 14th in market turnover suggests that while Intel remains a significant entity, its stock is currently experiencing a level of trading activity that may not reflect the high-stakes urgency of the AI revolution for some investors. This situation highlights the critical importance for Intel to clearly articulate its strategy and demonstrate tangible progress in adapting to the new demands of the AI era. The company's ability to regain momentum will likely depend on its success in delivering cutting-edge products, securing key partnerships, and effectively communicating its vision for the future of computing in an AI-driven world. The market sentiment is a powerful force, and Intel's current performance signals that it is under pressure to prove its resilience and relevance in this transformative period. And what does this mean on a more official level? We're turning to the confirmation of a major governmental stake. U.S. government secures significant stake in Intel. In a move that marks a notable evolution in the relationship between government and industry, the United States government has officially become a shareholder in Intel, acquiring a substantial 10% stake in the semiconductor giant. This development signifies a new chapter in strategic economic policy, where governmental investment extends beyond traditional crisis interventions into the realm of proactive industry support and national technological advancement. Fox Business correspondent Lydia, who provided the latest insights on this groundbreaking deal during her report on Special Report, detailing the implications of this unprecedented partnership. The 10% stake means the U.S. government is now a direct equity holder, a position that carries significant weight and potential influence over the company's future direction. This strategic investment is rooted in the broader national objective to bolster domestic manufacturing capabilities, particularly in the critical semiconductor sector, which is vital for both economic competitiveness and national security. Intel, as one of the leading chip manufacturers, is at the heart of this initiative. The government's decision to convert grants into an equity share reflects a commitment to ensuring the company's long-term viability and its capacity to innovate and produce advanced technologies within the United States. This approach diverges from the historical norm, where government equity stakes were typically reserved for situations of severe financial distress, such as the bailouts of the auto industry or financial institutions during crises. By taking a stake in Intel, the government is signaling a more assertive role in shaping the landscape of key industries, aiming to secure technological leadership and supply chain resilience. The implications are multifaceted. For Intel, this partnership could provide a stable financial footing and strategic alignment with government objectives, potentially accelerating research and development in areas deemed critical. However, it also introduces a new dynamic of governance, with the government now having a vested interest in the company's performance and strategic decisions. For the broader business community, this move raises questions about the future of public-private partnerships and the potential for increased government involvement in corporate affairs. Analysts are closely watching how this relationship unfolds, particularly concerning the balance between government oversight and corporate autonomy. The success of this venture will likely depend on effective collaboration, clear communication, and a shared vision for advancing technological capabilities while ensuring fair market practices. The U.S. government's new role as a significant shareholder in Intel represents a bold step, underscoring the strategic importance placed on domestic semiconductor production and innovation in the current global economic and geopolitical climate. And that's just a glimpse of the stories making headlines. We'll give you the full rundown in our lightning recap. That was a whirlwind of critical updates. We covered a sharp economic critique of Intel's management, the president's push for more government investment deals, Intel's stock dip amid AI shifts, and the US government becoming a 10% shareholder. Don't miss out on any of our future breakdowns. Make sure to like this video, subscribe to Qualcomm Pulse for your daily dose of essential news, and hit that notification bell so you're always in the loop. Plus, check out our social media channels for even more insights. We'll see you next time.